Hey, everybody, welcome back. This is the third episode of the Micromath podcast where we look at stocks trading under $1 billion. We got a lot on the agenda today, starting off with a big market sell-off, then a bit of a rebound. There's some nerves around, has AI investment gone too far? Could there be a recession in the US? Up here in Canada, unemployment rates are significantly higher than they have been. So there's a lot to discuss. Declan, let's just jump right into it, man. What are you seeing in the market? It's been a weird Monday to Friday this week.
Oh my gosh, has it? Yeah. Things sure changed around and trillions wiped and then somewhat of a recovery. So I think people are trying to grapple with the current economic situation, but a lot in store. I'm curious what you think.
Well, I mean, forever now, it's been a story of the Magnificent Seven, and then I guess the S&P 493. It's been like a completely different tale. And if you have something to do with technology, primarily AI, your stock's been charging ahead. And I think not everybody realizes that the bulk of the market has been, like the bulk of the good market performance has been powered by these AI companies. And now seeing some signs of concern out there because no tech stock does well if there's a hint of recession in the mix. That's just generally not a good thing. These are companies that rely on massive growth in order to sustain their generally high valuations. But things have changed. We saw stocks came down quite significantly on Monday. And one thing that people are saying is they're looking at the price to earnings ratio over the last 5 years compared to where it is now. And stocks like Nvidia, for example, you're actually getting it at comparatively decent value. Not to say we're bullish on going all in on Nvidia. It's just interesting to see from that perspective that it has corrected pricing to bring it closer to reality. And it's comparatively, these stocks are at a decent value right now, but people are still concerned about what the future looks like. Stocks that have risen so fast can't generally hold on to that valuation. So, we're seeing things turn around. Is there anything in particular that's kind of jumped out at you from what we've seen this last week?
Well, I think you said something really important there, and that's just that these kind of opportunities create moments for investors to buy into businesses at lower valuations. So one big takeaway that I've kind of learned, not just through this week, but over the course of the past couple of years, is that it's really difficult to predict where the broad market is going. And whoever dubbed markets to be efficient must have been losing their minds, because if the past 7 days have been any example of what can happen and how anyone looking back could possibly explain why things went the way they did, I would refuse to believe it. So I think that's one thing there. But then the other part of it is just there's a lot of emphasis towards the macroeconomics and market timing and whether interest rates are going to go up or down, how inflation performs, job reports, all these different things that, sure, they play some kind of impact in the short run. But realistically, we investors should be focusing on what happens over 2 to 3 years and beyond. And so if you're overemphasizing what happens in these short moments, you kind of miss these opportunities. And that's where it helps when you're analyzing individual companies and investing in individual companies, that you can kind of block out all that extra noise that the market seems to obsess over. And so just as you were saying, when stocks like Nvidia do crash, okay, maybe we're not saying Nvidia is cheap, but because it kind of spreads throughout the rest of the market, you can probably find opportunities elsewhere in businesses that you may have been watching for a while, but were just too pricey at that time. So those are the big things that I think my observations from this past couple of weeks have really shone light on.
Yeah, fair. And if there's one thing the market doesn't like, it's uncertainty. You're mentioning interest rates where they go up, down, sideways. I think in Canada, we're definitely seeing they have cut rates. They'll probably continue to cut rates. US, same thing. But then Japan hiked rates. So they're on a totally different wavelength than the rest of the world. So it just adds some unease. So what becomes of that? I mean, let's just see. But just like you mentioned on how it's, good to look at individual stocks. We found a lot of good stocks that maybe some cases it's not so much that they've fallen from grace. A lot of them are just left behind. Like a lot of this market hype literally went to 7 different companies. And there's thousands and thousands of others that just have not experienced the love. We only just recently saw the Russell 2000, like the small caps, got a bit of love. There's some action there after a fairly long quiet period. But then you go even smaller to like the micro caps, and there just has been no love for so long. We've had a few companies we've talked about, Alaska Energy Metals, Dynacert, Versus, which has pulled back. But all these companies have had massive wins, either over the last few months or the last year. But that's those are the exceptions, not the rule. you're seeing so many companies, a lot of them with attractive valuations or at least excellent technology and prospects that have just been given no bid whatsoever. Like before this video we're making here, I got off a call with a US investor relations guy I know. He's been in the market for much longer than me. I think he's at 33 years. And he says this is the worst he's ever seen it for junior companies. You can find companies with great fundamentals, great revenue, maybe not cash flow positive, or they might not have positive earnings, but they're on the right trajectory. And even at really, really attractive valuations and warrant coverage, even royalty structures, these companies are just not able to raise money. It's extremely difficult. It's almost like not even a tale of two markets. It's like a tale of like three or a tale of like six different markets that are all behaving completely abnormally. So you mentioned you hate hearing markets are efficient. It's almost like at the big stuff is quite efficient in the sense that everybody knows everything. It all gets priced in, but we're also looking out like further and further ahead, like 3 years. So it's oftentimes nothing to do with what the economy looks like right now. It's like, what does the economy look like in 3 years? But then you move down to the small stuff and there's no efficiency whatsoever. It's almost like people don't even look at fundamentals or like valuation or like cash flow or all that seems to be not important. It's just like when the hype is gone, the hype is gone. So we're seeing more interesting deals probably than ever. And some that you just look at and you're like, it doesn't make sense. Like, why am I missing something? Is there some skeleton in the closet? Like, you know, some of the things that we've looked at even just recently, we're seeing excellent fundamentals, like on Perion. That stock keeps getting beaten up like crazy. So it's just a weird time to be alive, I guess.
No, absolutely. And I think the one interesting part of this is that the market does tend to ebb and flow. And so if you do zoom out far enough, for most of us, especially you and I, Kev, we wouldn't really be familiar with this time. But if you go back to the 60s, there was a time when these nifty 50 stocks were dominating the market. And it was basically 50 companies that were mostly conglomerates that investors were just preaching would never fail, would always continue rising in value, and nothing would change. And they were getting all the attention. Now, what ended up happening was a stock market crash shortly followed, and those companies kind of returned back to the norm. And all those other businesses that were overlooked kind of were elevated by the shifting of funds and capital going from those businesses into these other areas. So I think obviously we're in a period right now, and if you have missed out on the Magnificent Seven, yeah, it's probably going to feel painful in the short run. But the good thing is that the markets are always changing and nothing is constant. And so there is going to be a point in time where perhaps these other businesses, and as we've kind of seen recently, especially in the Russell 2000, where things start to pick up in other areas. So don't get discouraged. There's lots of opportunities still in the future.
Lots of opportunities. And I think they say it's over, you know, the market does this up and down and up and down, but over any 15-year stretch, the market always goes up. Context is key. You're right. In the 60s, I was not here then. Thank you for not making an old man joke. I do not know what it was like back then. But the nifty 50, they probably sold tie-dye and LSD and I don't know what else. I'm curious what you think. So a lot of this chatter is about the potential of a recession. But funny enough, if you surveyed people in the US or probably even Canada, most people would probably say we're in a recession right now. And they've even dubbed it the vibe session, where economic stats have actually been okay, but most everyone thinks we're in a recession. Probably part of that is just, you know, wage growth is minimal. Unemployment has just gone up a little bit, more so in Canada, but stuff, just buying things is so expensive. And somebody, I saw this clip of somebody with a Walmart basket from, I think it was 4 years ago. No, it was even less. It was 2 years ago. And they were able to reorder all. So they clicked reorder all and they saw the difference in price was something like more than 60% difference. And it might have been even closer to 100%. So it's just interesting. You see all these stats about inflation, whether it's 3, 4, 5, 6%. That's very inaccurate in certain cases where it's jumped almost. Prices have almost doubled, yet people are definitely not getting paid double the salary they once were. So I think people just feel worse. And that has a ripple effect all through the market to technology stocks, growth stocks for sure, but to the small stuff like the venture capital stuff, the really speculative pre-revenue companies and just industries as a whole, all that stuff loses interest like crazy because that's the highest of the high risk. And you need people like regular retail investors to have a little disposable income, to feel a little bit better about their futures. And you're just not seeing that. So that has absolutely cratered parts of the market. And I don't even think, technically speaking, I don't believe we are even in a recession right now, though it is a lagging indicator. We could be in a recession right now and we wouldn't know until the future. So we could be, but data is kind of saying, data says we're most likely not, but people are, it's like what was it? Goldman predicted a 25% chance of a recession in the US, which is interesting. I mean, how do you feel? Like, you're in Alberta, Canada right now. It's generally been like the money-making machine of Canada. What does it feel like over there? Are people nervous? Does it feel like there's a recession like looming? What's the retail vibe like?
Yeah, well, first and foremost, that video sounds very relatable. I think anywhere you go, when you go to the grocery store and you try and buy $100, $200, you're coming out with just a few bags of groceries, and it's not like it used to that way for sure. The other thing I was just going to highlight in terms of that is it's really weird time right now where I feel, like you said, a lot of people are kind of notioning that there's a recession. They're almost anticipating it. And so because of that, perhaps the market hasn't reacted accordingly, where normally when you would see a recession, you would associate it with poor economic performance and the market would likely crash. But that really hasn't happened. And in some instances, it's kind of done the opposite. And so what I wanted to highlight here, and it even ties back to the local economy here in Alberta, but really expands more broadly as well, is just this idea of black swan events. This is nothing new. I think a lot of people have started to talk and discuss these sorts of things. And basically, a quick recap is it's essentially an event that you can't anticipate that leads to kind of quite drastic consequences, whether positive or negative. And I think people are really kind of confusing this idea with, okay, well, we are anticipating this idea of a recession. And so because we're anticipating it, we're preparing in a certain light and doing things to perhaps take advantage of market fluctuations. But the reality is that a black swan is not predictable. Nobody can predict it. And so the last time we really go back to a great crash is here in COVID, when that happened. And really, it was very difficult to anticipate those events. So I think right now everybody's kind of in this limbo state where we're like, okay, is it a recession? Is it not a recession? And yes, times are tough, but nothing cataclysmic has happened to lead to like a grand recession or the opposite, where things have really turned around. And so we're just kind of stuck in this point where, economic conditions are not ideal, but it's also not terrible and it's not like excellent either. So you just kind of have to sit and wait. And then it always ties back to, again, stop focusing so much on the macroeconomics. And if you focus on individual opportunities in the market, you can still take advantage even in these times where things don't seem super certain.
No, fair point. I was just reading ahead actually about Versus, going to the next topic there. So let's just jump into it. I was just trying to think of how I'd explain it, because Versus, it's a complicated story. It's been complicated. It's, though maybe the business hasn't become more complicated, it's like the story has become a little more complicated. So this new standards, if you're familiar with the IEEE, they create standards for electronics. I'd give you an example: Wi-Fi, Bluetooth, some of the most classic piece of technology people are familiar with. There's a reason that an iPhone or an Android or any manufacturer can connect to anyone's Wi-Fi. Same thing for Bluetooth, because there's standards about how they connect. And the reason that they have similar standards is through this agency called the IEEE, the Institute of Electrical and Electronics Engineers Standards Association. Nice, short, sweet, easy to memorize, that's for sure. They create standards for these kind of things. And recently they've accepted the standards that were proposed by, I guess they weren't proposed by Versus, but they were proposed by the founders of Versus through the Spatial Web Foundation. And the IEEE has approved their Spatial Web standards, which is a big thing that we always expected would happen. But what this means is, when we talk about the spatial web, I mean, first off, if somebody's not familiar with what that is, maybe let's start there. What is the spatial web? Well, when you think of a futuristic situation where you're walking through the streets and you have like eyeglasses on, and you look at a bus stop and you see the upcoming times, you look at a barbershop and you see the specials, you can even look and you can interact with gestural commands to book an appointment. It integrates then with your home smart system, so that when you're driving, when you get into your car and you set your route to home, it starts turning on the AC at your house or heating it if it's in the winter. Things like that. This really futuristic world where everything's connected. That's called the spatial web. Now, if you were to go into a system and try to do something like that right now, what you have is you'll have all these separate systems that don't talk to each other. Some companies like Apple and Google have made their own little ecosystems where their products will work well together. But if you want to introduce another product into the mix, it doesn't have that connectivity that I just described. So with this spatial web, it needs to have some kind of standardized way for these different machines to communicate and talk to each other. And the VRSSS founders, through the Spatial Web Foundation, which they founded, they proposed a set of standards that are the Hyperspace Transaction Protocol, that's HSTP, and HSML, which is Hyperspace Modeling Language. And everything they have, their Genius platform, is all built to these standards. They're assuming that they would be written into law, if you will, but written into the law of the IEEE. And it just happens. So what this means is everything they've done has been built assuming these standards would be accepted and everyone else would have to play by these rules. So this was always something we liked about VRSSS, because inherently if these standards get approved, that gives them a pretty big head start because they've been developing this for a long time now, right? Whereas everybody else would now have to integrate those standards if they haven't already. So pretty big, exciting announcement from them. There's still more to it. I don't think it's a done deal. I think there were certain people that voted it down and their concerns need to be addressed, but it sounds like it's basically on the final yard lines there for getting that touchdown. So, Declan, you're familiar with this approval. There's a lot more to talk about with VRSSS. I mean, I could just open floor. That's the background. Is there anything you wanted to dig in with them in particular?
Mm-hmm. Well, whether it's the approval of these standards or they also just came out with a research paper that is pretty monumental. And between those two things, I think the big thing here is when investors look at this, if they look at the financial statements, it's not going to look like something that is generating a lot of revenue today. But what these monumental kind of breakthroughs or milestones that they've built here and accomplished, they set in stone that this company and the technology is being validated and demonstrating its capabilities. And on top of that, that management team is executing and delivering in some regard. The IEEE and the approval of the spatial web standards is not something that was developed or initiated last year. This is something that has been in the works for the past 5 years. And one other big thing to note about them is not only do they interconnect these IoT devices, but they also allow humans to effectively govern autonomous agents. And that's something that we're going to become a lot more familiar with in the coming years. So as autonomous agents become more mainstream, we need to effectively set out rules and contracts that lay the foundation for, hey, these are the beliefs and values of my society and civilization, and you must comply with these. And today, right now, what companies are doing is they are programming and creating algorithms that kind of set out the path or rules that they need to do in order to effectively create the outputs that they're set out to do. But we need to be able to, when we give an autonomous agent a device that is built, whether that's a robot, set out to carry out a task and do it without human oversight, in a way that we are preventing them from going beyond their context and perhaps harming our society. So I think that's one other big part of this, that now with these standards in place, and something that, like you said, the VRSSS founders played a critical role in developing, is really going to set that path in motion.
Yep. I mean, great example. Think about like a drone delivering food or something like that. Shouldn't be a super complicated problem, but imagine you're in a city where the zoning rules change, and then they're going to have certain high-rise development in certain paths that would have been for drone delivery. Maybe there was some accident in like an area where it's like a high pedestrian area and they decide they need to reroute things. Like rules in cities will change all the time, whether it's for, like I said, an accident happening or new development happening, or even just opposition. Like you'll get people that say, these drones are too loud. I don't want them zipping by my home, and they, vote it down. So like cities always change their rules, but if you're going to have these systems that autonomously work together, there has to be a framework to allow them to communicate, which is what we're talking about through like these spatial web standards. But then, VRSSS, like their tech, also has a way of like learning and ingesting data in real time, which a lot of these other AI companies just can't do. And it's like, we love the example of how like a large language model, you ask it a question, it looks smart. Well, okay, fine. I guess like Declan, if I gave you every book in the entire world and I said, read this and memorize all of it, yeah, you'd probably be able to understand it. But well, forget the fact that that's impossible for a human. Let's just say it would take you years and years and years. You'd have to sacrifice friends, family, income. So they would come at a cost. There's a physical cost of the books. Like, it's just a very inefficient way to do it. And it doesn't mimic a human brain, because that AI is not learning to learn for itself. It's just learning to spit out information very quickly that it's already been trained on. Whereas this new approach with active inference, it's more like a human mind. It can reason, it can understand, it could be, rules could be changing mid-flight of this drone example, and it could reroute based on that, because it has this real-time ability to process information. So just pretty mind-boggling stuff. I have not gone deep into this research paper. It's going to be just some casual weekend reading, but I haven't dug into it. I don't know. Have you gone pretty deep into it yet?
Yeah, well, I gave it my best shot to read the paper, but I also wanted to kind of give a little shout out, because I think there's two resources that will really help you kind of understand this in a framework that is more comprehensible. So one is this independent writer named Denise Holt. She wrote a great article discussing active inference and highlighting the key points in this paper. The other is this guy who I was just recently introduced to, who is called Ted Werbel. So you can find him on X as well as LinkedIn. But they both do a good job just kind of highlighting and breaking down the main points. So the big thing that is coming from this paper is, and this is spearheaded by Dr. Carl Friston, who is the pioneer of active inference, as well as Versus AI's chief scientist. But what they are essentially getting at is that they've created these renormalizing generative models. And in layman terms, that simply means that these models are basically able to break down these really complex tasks or systems or environments and simplify them down to their fundamental core. And what this enables you to do is it doesn't require a lot of data, but you're able to operate within a context or environment and be able to effectively execute that task, not from a foundation of all this training in advance, but from this belief state where you're kind of looking at this context and you're forming these ideas and opinions. And I'm talking about the intelligent agents here, where they ultimately have to complete this task, but they don't know the outcomes. And so what they're trying to do is minimize that uncertainty by making predictions and applying their predictions and updating those beliefs in real time. And so when it comes down to it, what this paper is really showcasing is what Versus AI and active inference have been highlighting for quite some time, is that rather than coming from an approach where you're taught everything, like you said, where you digest every book and then generate outputs from that, you're coming from almost a humble state where you're saying, I don't know anything. I need to find the answers. And the only way to do that is to go out and test my hypothesis and update it as I learn. And so when basically what this paper is highlighting throughout is these different tests. The first is MNIST. So this is a image and number recognition test that you'll draw these different numbers. It's human drawn. And basically the AI system has to learn how to associate that drawing with a specific number. And then they're graded on how effectively. So let's say I draw 7. Is that AI guessing that that is actually a 7, or are they guessing it's a 4, and the like? And so today's top models, they achieve about 99.8% accuracy, but this is usually done between 100,000 and 1 million training images, these top models. And Versus was able to achieve it with these RGMs, where they achieved the same 99.8% accuracy, but with only 10,000 training images, which is 90% less data than the top models out there today. So this is just a prime example of how this different approach, using kind of this bottom-up idea where you're starting with no information and going to learn and test new ideas, creates an opportunity that is super efficient, requires a lot less data, and costs less overall.
Mm-hmm. And the efficiency is the key thing. Like, going from Chat GPT like 4 till 5, for example, the amount of money that would be required to just ingest so much more data, they've already spent an unbelievable amount of money that there's a certain point where it just doesn't make sense. And they've even admitted it themselves that something's got to give. There has to be another way to do this. And something like this, with minimal trading data, that's the key. So because you get less training data, but you also get real-time ability to ingest real-time information. So it's like multiple critical breakthroughs, and seeing some of these tests, it's really cool. And actually sometime this month, apparently Carl Friston is actually going to do, I don't know if it's a demo or just some kind of live explanation, but expecting that to be announced. I saw it in one of their press releases. So really excited to watch that. It might be a bit of a long shot to get Carl on the show here, but you never know. I've definitely reached out to Gabe to get him back so that we can chat more about this stuff. So hopefully we can get some of the real smart guys on this channel to kind of school us a bit. Looking forward to that.
Yeah, that would be fantastic. And actually, just one final point. This is more on the speculative side, but it's kind of fun and interesting to explore. So again, this Ted Werbel guy here, and going back to OpenAI. So he kind of highlighted just this feature on versus AI, and not paid by the company, just completely independent, and did his own research and just discussed the business. Then he followed it up shortly after by discussing how OpenAI is apparently adopting active inference, and laid out how they're potentially going to use this in this new project called Strawberry. And so within all of this,
CEO, that's what the tweets were about. I saw little Strawberry tweets. Okay.
That's it, right? Yeah. So CEO or versus AI CEO, he commented, and I'm quoting him exactly, but he said, "Should I comment? I shouldn't comment. Maybe end of month I can comment." And he had a little monkey face with the mouth covered. He had strawberry and the butterfly. And so again, this is highly speculative. There is no information whatsoever beyond this, but it is interesting to see that this connection and this adoption of active inference is going mainstream and reaching the top companies. Now, whether versus AI is a part of that and helping them develop it, or they will be potentially competing against them, is yet to be determined. But I think it's interesting that I think these larger companies are finally waking up to the potential of active inference and what versus AI has been developing.
Yeah, that's interesting. OpenAI definitely has an active inference team. There's other companies going after it, like Chamath Palihapitiya. He's involved in a company called Grok, not to be confused with Elon's Grok. Two AI companies with a very similar name. I don't know why they couldn't have just chosen something else, but also focused on active inference and all that. So certainly there's going to be tons of companies going after it. You just got to feel good because Carl Friston versus chief scientist, this is absolutely his game. Like, he is the founding father of this way of thinking, and versus is quite far along with it. So let's see. Gabe, you sly dog. Can't wait to see what happens here. But I mean, they put that giant billboard. Was it a billboard? No, it was a New York Times article, like a big ad calling out OpenAI. So OpenAI saw that. If somebody has the balls to do something like that, at the least they're going to do is look into the company a little bit, and hopefully they're impressed. Let's see. I don't know anything else. But okay, let's finish off the pod here today with a honestly totally different topic. We're going to talk about plant-based food. The reason we want to talk about this is because Beyond Meat was the belle of the ball for a long time during like lockdowns and stuff. Beyond was, I think they even hit $6 or $7 billion market cap. Sorry to say, over the last 5 years, 97% of that is completely eliminated. So if you're a shareholder, you're a very unhappy one. Though it was like an exciting company, it's not one we ever really got excited about. It's a plant-based product. There's lots of reasons why that's a good thing, but they didn't really solve the core problems. They created a science experiment that if you really want to, for ethical reasons, you don't want to eat meat, then fine, they've given you a solution. It tastes and looks like meat. But if you want something healthy, this is not your solution. If you want something cheap, this is not your solution. And what once happened, where I feel like you couldn't go to a fast food restaurant or a grocery store that didn't have some kind of big announcement of rolling out Beyond Meat, that has completely changed course. I think it was about 6 months ago, we looked at Google Trends for like plant-based meat versus carnivore diet. Carnivore diet was like almost at like a 2-to-1 level of interest. It had completely switched since like 2020, 2021. And it seems like you're seeing this company just fall down like crazy. Their market cap is a fraction of that. They're right in our territory. Like, they're a $410 million market cap company. And you look at the revenue, $343 million. You're like, okay, wow, this thing's barely trading higher than sales. There are many skeletons in this closet, including $1.2 billion in debt. And these guys are Not even close, not cash flow positive at all. They are a money losing business. They are a revenue declining business. I want to bring it up because it was such a popular, exciting stock that we never got behind, but people were in love with it. Now here we are. Like, Declan, I know this has never been one on your hit list, but like, what are your thoughts on this company in general?
Well, we've thrown a lot of slander towards Beyond Meat, so I'll give them the benefit of the doubt first. They did improve their unit economics, and so they now have a positive gross margin as of this last
Ooh.
quarter anyway. So
Congrats.
props to you. It's only a 14% gross margin, so certainly not attractive, but
Yeah.
they're on the up and up that way. I just think that this is a company that will likely stick around. Like, it's the poster child still to this day of plant-based foods. But where I think we're starting to realize is that the market's a lot smaller than everyone initially anticipated. And so now their main strategy right now is reducing costs, increasing those opportunities of reaching profitability, but they have to really scale down their business from what it once was. And that's just getting highlighted throughout their recent quarter. Everything's down. US retail channel was down 7.5%. International was down 12%. So it's one of those things that they're going to really need to dial back and trim off a lot of this excess fat and be able to be in a position where they can withstand it, so that ideally at some point, maybe if it ever happens, the unit economics will get so attractive that they can actually be profitable and cost less than the alternative that is regular meat diets. So I just, again, long term, it's very, very unclear where Beyond Meat is going to go. And so I would rather sit on the sidelines for this one.
You talked about trimming fat. That's a butcher joke that you might trigger some vegans in the audience. I don't know. I would think they just didn't hit this one on the mark, because I think the core people, like a lot of vegans, yeah, a lot of them are vegans for ethical reasons, but a lot of people are shifting that way for performance reasons, like athletics. And Beyond did not have a solution for that. It's massively high in sodium. These burgers are like a science experiment. If you want to be vegan, eat beans. Eat beans. You know what I mean? Like, it doesn't have to be more complicated than that. Something that interests me is cultured meat. We talked a bit about Mulek. They created that soybean, which had like a pork gene in it. So it was actually like growing meat in soybeans. It was kind of a mind-boggling concept. People went crazy in the comments. It is not a popular suggestion for a technology, but I would say cultured meat, which is kind of in a similar vein to that, but more like, people would think of it as like test tube meat, which sounds grosser than it really is. It's just taking I guess I don't know, it's the DNA of like pork or something like that, and just literally growing it artificially. You are left with a product that is bioidentical to the meat that you want it to be. You just need to mentally get over the fact that it doesn't come from an animal. So if you're not eating meat for ethical reasons, this would check that box for you. And it's, technically speaking, as healthy as regular meat, as far as we know. Who knows, 20 years, maybe we learned something new. But I'd say cultured meat is something very interesting. I'd try it. I've never tried it. Would you?
Oh yeah, absolutely. I'm open to any of these ideas. I think it's really cool just that you can kind of cater these, and like you said, who knows, maybe we'll find out in 20 years that it's bad, but you could also genetically enhance the meat and give you additional protein concentrations and the like. So that's
super
exciting.
meat. It's interesting. So, I mean, there's a couple companies we've been looking at. Mulek was one of them. Cult Food Sciences, that's a local one here. We know the CEO. That's an interesting one. I haven't gone too deep into the stock yet, but they make pet food products. But the whole cultured meat thing, that's interesting. I feel like, yeah, if you're going to be a vegan for just like purely healthy reasons, just eat beans and eat vegetables, like whatever, call it a day. If it's more for ethical reasons, something like cultured meat could be very interesting because it uses less water, uses way less space. Just like you said, you could enhance it. So maybe there's like extra high iron, and you give that to somebody who's anemic. Extra high protein, maybe an older person eats that doesn't have the same amount of protein. There's so much that's interesting about that, but I just already know people in the comments are going to probably lose it because everyone is just super grossed out by the idea of cultured meat. But I'm curious, for you watching this, like, would you guys at home, would you eat cultured meat? Yes or no, and why? I'm curious. It has a lot of benefits to it. You just got to get over that psychological barrier of how strange it really is. I think those Mulek pork beans, that's a weird one. There's something Frankenstein-y about that, but I'd still eat it. I'd try.
Mulek, if you're listening, we're willing to take samples on the pod here, so keep us
Yeah.
posted. But yeah, no, I think it's one of those things that I'm curious. Like from your end, do you think that Beyond Meat is going to kind of constantly stuck in this position where they're competing against the meat market, or is there a potential for them to turn it around, perhaps building cultured meat or the like?
Cultured meat could be interesting. I know they do have some initiatives where they're trying to make their product a little healthier, whether that's, what is that, decreasing sodium, maybe a few less ingredients. I don't know what there's a few options they could do to make their product a little bit better. But I just feel like the whole mission of the company is maybe misguided, thinking that people that are vegans want the texture and taste and bleeding of a meat product, and they'll do whatever they have to do science-wise to get there. And I just don't think that's the desire. Like, I think there's just so many other more attractive solutions for the problem, cultured meat being one of them, that I think they would like. I just don't believe in the business model overall. And then the market's showing us as well. It's just been constant, revenue declines. Like, I just don't see how this turns around. Like, I don't think the public is going to get super excited about this stock. Could they get into cultured meat or something? Yeah, for sure. I think that would be a good angle for them. But then again, they've already spent how many, millions, billions? I don't know how much they've raised and spent. I know they had a ton of money. They've already spent it on proving this one market. So what, do you raise another $1 billion at a massively dilutive valuation like this? Like, I don't know if you do. I just feel like the writing's on the wall for Beyond. I just don't see a comeback there. What about you?
No, that's a great point. One of those things where they have about $145 million in cash right now. Last year, they lost $338 million. So they're kind of on their last breath. It's very likely that they're going to need to raise more capital in the future. And I think it's a very different market where it's probably going to be tough to convince investors that the story is changing, especially with the recent numbers. So Beyond Meat has a lot of challenges that they're facing today. And if they are able to turn it around and pivot, who knows? But they're certainly not in the financial position where they have a lot of flexibility. And as you said, there's new developments and alternatives coming to market that are perhaps a much more viable solution. And so Beyond Meat's going to need to do a lot with very little capital available to make this comeback a reality.
Yeah, like, to put it in perspective, their Q2 net loss was 34.5 million. So that's like, based on the current cash, if they stayed at a similar run rate, that's like a year to live. Otherwise, they have to raise money at a really dilutive valuation, or they need to really turn this thing around. And this has been a company that's lost money forever. So I just don't see how that happens. And remember, if you're looking at this and you're thinking $410 million market cap and $343 million revenue, wow, what a steal. Remember, $1.22 billion of debt that you have to acquire as well. So, ticking time bomb. I don't like it. I'm scared and I'll stay away from it.
I was going to ask you one last question, and this is purely hypothetical, but do you care to speculate on why the market reacted so positively to this recent quarter and what would justify, I think the price shot up around 20% on the news. So
yeah, I mean, I don't know what honestly, the only thing I can think of is that people expected it to be way worse. Like, I guess net revenue decrease of 8.8%. I mean, it's a decrease, which is terrible for any growth stock, and that's going to immediately smush your valuation. But I think if people were expecting a 20 or 30% decrease, and they came in at 8.8, I guess you could call that like an overperformance on earnings. But that's what else could it be? I mean, it's that, or they're happy that the net loss is getting a little better. If people were expecting to see a net loss of like 60 million and it'd be half of their cash, people would freak out. It's maybe half of that. So what else was exciting about this? I didn't see anything that was really good news in there. I guess people were just, it's fallen so far that the expectations were just so low. Like, well, what do you think? What else could it be?
Well, the ground floor, you're right. I just wonder if investors or institutions that are buying this, if they're trying to take advantage of a short-term fluctuation, but it just seems like the fundamentals are deteriorating. And either way, they've been at a valuation that has not really justified, that it's undervalued per se. And so as this kind of deterioration in sales and they continue to lose money, continue to push in that downward trend, I don't see how either in the short run or the long run that this turns out positive unless they drop some random news out of nowhere that really boosts their potential. And so it's just interesting to me that the market would react so favorably when it doesn't seem like there is any positives, and it's more like people are just grasping for straws in this case.
Yeah. You know what? I didn't look at the short position. I assume this stock's probably massively shorted. There could have been some unwinding of positions there. Like maybe they had made their, the company's share price had gone down enough. They felt it was sufficient. Results came in, revenue is down 8.8%. Be like, okay, that's actually, better than expected. Maybe it's time to unwind my short. I'll buy it in the market. It could easily be something like that. This looks like a perfect stock to short. Maybe there's some homework. I'll take a look at that and report back.
Sounds like a plan.
Okay, well, this is Friday that we're recording. This is episode number 3 from the Micromath podcast coming to you. This is Small Cap Kev, Mr. Fundamentals. Guys, thanks so much for tuning in. We'll see you again in a couple weeks.